Hello and welcome to the Wednesday check-in brought to you by David Gockstein. And today is August 5th, 2026, and we're looking at Bitcoin on the daily to start. And we're going to be following up from the Monday video. And essentially, Bitcoin hasn't done a whole lot. It's still in the same closing range that we identified some time ago, $62.5 to $65,000. And now it's about, can Bitcoin actually escape the $65,000 area and break this local downtrend on the daily, and then potentially set up for a move higher, and then maybe build some structure off the back of that in higher lows or something along those lines? Or is this going to be a continuation of the downtrend? And that's really, while it's in the range, kind of doesn't really do anything for us, right? It's hurry up and wait kind of a thing. In this case, very easy to see what criteria needs to be met for a trend break. And in this case, it is any closes above this last lower high, if I can actually get it, at 65,375, right? That would break the daily downtrend. And that would get Bitcoin above the upper first standard deviation and headed towards the upper second standard deviation, which is where we have the close open here around 66.3. Anywhere above there, I'd be looking for the local highs around 67 to that 67.3 on its way to go test the primary overhead resistance at 68 to 70. And of course, that also encompasses the prior cycle all-time high. To the downside, drop the lows obviously would put Bitcoin below the lower second standard deviation here, which is now coming in right at 62.5. Any closes below there, we either have already run those lows and potentially lower down to test, anywhere between 61 to 61.5, around these wicks. Now, any closes below 61.5 would trigger downside expansion on the daily towards the other areas of interest. We're looking at 60,000, which is essentially 60,800 over here. But, we could tap on 61 there as long as it recovered the wicks. But realistically, we'd be looking for expansion down to 58 to 60, potentially more down into the mid 50s. So that's both sides of the equation here, with very, very clear criteria for closes on the daily. Again, closes on the daily are going to be the conditions that need to be met now to break the downtrend on the daily to the upside, go for more towards the upper second, which would be around the high sides of this structure, and then potentially the upper third on its way to go test somewhere around 68 to 70. To the downside, pretty simple. Closes below 62.5. We're running the local wick lows. Safe down to around 61 to 61.5. But if it starts closing there, that's going to trigger expansion to the actual low side structures, 58 to 60, with more on the board. And I don't really need to show the the things that I show all of the time, but I'm going to show them again. And that is the support and resistance levels or areas of interest. And I wanted to show these again because of the confluence here on the daily and then, of course, the weekly. So, when looking down below the lower second, it can wick down to the lower third standard deviation perfectly fine, even through it down to 61. As long as it starts getting bought back up above 62.5 or the lower second standard deviation is fine. It wouldn't trigger daily expansion right away. And realistically, though, if we do that, I would be looking for daily expansion to trigger down to these lows and potentially a retest of this area down here. Of course, the monthly is between 58.8 and 60,000 to 60,200 here. And then, of course, the swing at 58. I'd been calling for 58 to 60 since the actual highs. And if we were going to see a breakdown, when I was talking about 123 to 125, it was all about seeing that local top either hold up as, a macro top, which it did. But it wasn't until we saw monthly closes below the 74.4 region that would have been confirmed. And I was willing to wait for confirmation on that. And realistically, now we wouldn't get a structural change on any higher term time frame like a monthly until we saw, monthly closes above 82.8, which was a retest of that same higher low area that put in the swing at 74.4 at 82.5 is where that higher low close came in on a monthly. So, we're pretty far away from that at the moment. So one of the things that I know will happen if we do choose the upside route, break the trend, put in some higher low structure back to the highs, then head to 68, 69K, and then eventually to 70 to 70,500, where there is a major weekly level at 70,000 to 70,500, depending on your chart, 70,500 here on the index, and then up to 72 to 72.2 area. But there'd be a ton of excitement, but it really doesn't do a whole lot unless we saw a trend break on the monthly, and then it's all about the next bigger pullback and where that comes in for like higher low or equal low, or if it becomes a deviation at trend. Now, anywhere, if we did see the downside route chosen, the weeklies down here, mid 50s are a big area to watch. I'm going to follow up on Friday during the live stream where I'm going to discuss some of the criteria on the quarterly and the monthly that would point to some pretty significant conditions that, if met, would actually trigger not just another leg down, but probably a sustained move down. But we're not there yet, right? For now, we're watching price action in the local area as it relates to some of those higher term time areas. And I've been asked quite a bit. I was on David's show this morning. He asked me pretty directly again, like, you're what camp are you in? You're in the 30% that a low could form around here, like a macro low could form around here, because there's no macro low structure in. It's a lower low on the monthly. And that's not how you define a macro low. Lower lows are not macro lows. And you wouldn't get the confirmation of that until later anyway, with equal low, higher low structure after some sort of a trend break, or an equal low, a higher low of some sort with some sort of further lower high, lower than the 82.8. Prior to that, that would begin to start looking like it's changing structure. So it's like I said, like 30% chance as it stands right here, right now, that a macro low could form here. And then there's the timing aspect, right? With the normal cadence of price action for Bitcoin. It is getting into that zone of like time period, I should say, where, we do have to pay very close attention, August, September, October, for a potential move down. And if that doesn't happen, maybe the chances increase. We'll just track along the way. Price action is evolving over time. So, but if, it's still in the camp of, I'm still in the camp of like 70% chance that there is another leg lower. Whether or not that kicks off like higher term time frame expansion down remains to be seen. Whether or not we lose a basis band or a 20 simple on like a quarterly remains to be seen, right? You can still get a leg lower in lower term time frames like the daily, weekly, that don't result in, the closing structure on the monthly significantly changing, or the quarterly significantly changing. So, all of that is still up in the air, and it will be talked about to death by everyone, including myself. So prepare yourself. But, mid 50s are, 54 to 56 is kind of the name of the game. If we did start to see expansion down to this low, and then through the low into where I'd be looking, mid 50s, 54 to 56 first, and then 52.5 to 54. And then that would open up 48 to 50 as another big potential on its way to maybe more. As it stands right now, it's a whole lot of hurry up and wait. There is some etchings that Bitcoin on the daily could go for the trend break back to the upside and try for the local highs and higher into the low 70s, maybe even mid 70s. That is in the cards, right? So, but it doesn't do too much significantly on the higher term timeframes unless we saw it moving towards the 82.5 region, 82.8 by that lower high in the monthly, and then getting like a significant monthly close above it. So, just kind of watch and wait. All right, let's go ahead and check up on a few other things. I know that oil, and actually, no, you know what? Before we do that, let's go to the weekly, because I said I was going to look at this and then I didn't, and I apologize for this on Monday. So I wanted to point out that we have the weekly band levels right in confluence with major levels. 82, that's not what I wanted. 82.8. Or I'm sorry, this is, 82.8 area, 82.5, upper second. Above there, around 88, we have where there's 86 to 88. You can call it 86 to 89 because that was a swing low and a swing. It was a swing high and a swing higher low in that area. Or was it a swing low, swing higher, lower high, swing higher low? I'd have to go look at structure again. I think it was a swing lower high at 82.8 and then a higher low that spiked it. I'm sorry, at 89. So 86 to 89, it was a weekly. It was a lower high weekly, and then we found support on it. That's what it was. That's another area where we see the upper third. And then, of course, right at that monthly, we've got the weekly upper second. Upper first is right around $76,000. We have the basis right around 69. Lower first standard deviation is in line with the daily lower second at 62.5. And we have the lower second coming in around $56,000. Might not want to really pay attention to this because of a price replace band if we lost that, but we'd be looking somewhere around where the ETFs launched, and we found a higher low there as well, between $48,000 and $50,000, with the lower third coming in to around 49.5. So big deal here on the weekly. And as long as it's below the basis band, by the way, lower second, lower third are going to continue to head down. And we might even see, unless Bitcoin does rise to the basis, we won't see these flatten. We'll see the upper band start to curl down a little bit. So what you would want to see if you're bullish is you would actually want to see this kind of come back in and set up a range where these are going sideways at the major supports for the lower second, lower third, lower first, upper second, and then of course the upper third there by 89. So that's actually what you'd prefer to see. And then we just kind of wait in the wider range for structure to form. Either continuation structure off of this current weekly setup, which is lower low, lower high, or potentially a structure change that could prevent this from falling further down towards that lower second, and instead, break to at least break the local structure here at 67 and go for that 68 to 70. All right, let's go ahead and take a look at oil and some traditional market stuff, because we did one of the things that I actually said that needed to happen for traditional markets. But let's go ahead and take a look at the daily, as we did fall through the important area that I talked about last week and then Monday. We had the lower high, and I said make sure you're paying very close attention to essentially 76 to 77 by the lower first to around 79 to 80. We fell through that on the daily on Tuesday, and then we back tested this in the Wednesday session. So now it's about this area again to the upside, 76 to 77 by the lower first and bottom side of this support and resistance zone, to around 79 to 80. Of course, that would just be another lower low. If we get continuation down on this particular move, looking right to the lower second standard deviation, and you can see lower thirds racing back up as this went into a compression expansion, and now we're looking at either setting up for a range, or if this rises to the basis, we'll see this go back into a compression. But I would be looking at 70 to 72 by the lower second, down to that $68 per barrel by where the lower third is going to start to come in. Although, if we did see this fall aggressively through the lower second, 70 to 72, I would be looking anywhere from 60, 65, 66 to that 68 by that ever important major major higher term time frame support level. So, keep a close eye on it. Traditional markets, let's go ahead and take a look at those. Take a look at SPY. Look at that. We actually got close over close above the upper second. Now, granted, big sell-off and post-market is getting bought back to the Tuesday high close right now at 771. But I wanted to see above 765, close over close momentum to kick off expansion. We have now gotten that. So in order to preserve this, we need to see closes remain above around that 750. I would give it room at 755 to the 758 to 60 area for a gap fill. That would be fine around the upper first. If it is lost, I would look for this to fall eventually all the way back to around the 750 area. Initially, and then breakdowns below 745 is where we'd start to see 740 back in play. But initial expansion looks fine. I know there's a big sell-off off the top, and everybody's going to call for a top. But again, this is a structure break, so we'd be looking for higher lows if you're looking for continuation of this particular expansion. Safe area is pretty much 756 to 760. But you would probably want to see it closing more towards the high side, towards 760, and just do a gap fill and then continue to push on towards, back towards what the current all-time high is that came in on the Wednesday session. And that's 776. But then we can start to look for 780 to 785 on continuation of expansion, then eventually 790, 795, and then 800. Let's go ahead to NASDAQ. NASDAQ came right up to another big area that we talked about, but it did the trend break that we were looking for, and that's the important part. So trend break, above 29.2. Then I was looking for the highs. We're looking, 29.9 to 30K. We got it. If we get continuation, look to 30,002 to 300 and potentially more if it does want to race to the highs again at 30,500 to 600 in and around the lower high structure over here. And then eventually working its way up to the 30,750 and then trying for 31 by the upper third. That would be on continuation. I wouldn't necessarily look for this to just straight up just green candle its way there, but that's not unheard of. Realistically, though, if it does come back down, continuation to the upper second for a volatility zone would be sticking above around 29.5. If it does fall 29 to 29.2 is fair game all the way down to the 28.8 area. If it did continue down 28.5 to 28K is kind of the safe zone, or else it's basically going down for equal lows in the low to mid 27s. Dow kind of gave it away. I talked about this 3.5% correction. We have an internal market rotation. We reclaimed the basis band. We had already broken trend, put in equal lows, essentially lower low close, but equal lows down here at 51,550, 540 area. We've gotten close over close expansion. This does look like, a fairly significant inverted hammer, but continuation of expansion is essentially going to, occur on closes above 53.2 by the upper first. So safe higher low zone all the way back to that 52.5. If it did fall through there, then we're looking right back to the lows again. That wouldn't be great to see, but maybe if it did fall significantly, I suspect we'd see a structure change, like lower high, like higher low to lower high before that. But if it did race right back down to the bottom side, you'd want to see it try to save itself. If it loses the basis band around, 52.5. You'd want to see it trying to save itself around 51.8 to 52. And that's pretty much it. That's all I got for you for the Wednesday check-in. Please like and share. I do really appreciate it. Helps not only the account grow, but it helps, helps new people come in to see some of my analysis and my methodology for how I look at markets. We've been very, very, very accurate for a very long time. And that's not all me. I do take and I look at your comments. I do talk to many of you who are analysts, and I appreciate your perspective on the markets as well. And it makes me look at things a little bit differently if I feel like I've missed something. So it's definitely valuable for me. And there's always something to learn, because I can't have eyes everywhere on every ticker and every market sector at the same time. Although there's different AI tools that help with that when it comes to actual analysis and forming a thesis and then trading based off of that thesis. It is helpful to have the community that is you. So I really do appreciate you. I appreciate your comments, your likes, your shares, your DMs, and I look forward to seeing a lot more of that now and in the future. I will be back here on Wednesday, hopefully with a guest. We'll see. I'm going to be reaching out to them here in a few moments after I wrap up this recording, and we'll see if I can't get a guest on this Friday. And I think this would be the Friday pretty special guest that some of you haven't seen before, at least not on my streams. And it should be interesting if it is this particular gentleman. And I won't give it away. If I do have a guest, you'll see a post about it tomorrow. So look at the timeline and definitely share that one out if I do post about which guest that is going to be. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Tune in to David's show tomorrow. I should be there for a segment, and then I'll be on to the Wolf Bitcoin space. And then, of course, I'll be hosting ATC. So I will see you tomorrow and various venues and shows. And then I will be back here for a Friday live stream at 8 p.m. Eastern, 5 p.m. Pacific Standard Time. Have a great night. Landy out.